Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be going through our live mortgage rates for the day, and then we're going to be talking about DSCR loans, our favorite type of loan. So give us just a second here to go live on all the different platforms. We appreciate everybody tuning in nice and early. Go ahead and drop a comment there in the chat as you tune in. Hope everybody had a great weekend and is ready to get back to it here. So it looks like we're live on all the platforms, so we'll go ahead and get it started. We'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. Also drop any questions you have in the chat. We'll make sure to get to them after the presentation. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every morning at 11 a.m. Eastern on this show is go through our live actual rates, and then we do a deep dive into a different loan topic. And today's topic is going to be our favorite, which is DSCR, which is what we specialize in most here at the Mortgage Calculator. So Jose will take us through that. But before we do that, let's do what we do every morning, which is go through the live rates. So Nick, if you're ready, let's go ahead and pull up the rates and see what they look like today.
All right. So as usual, lots of drama in the markets here. Up, down, up, down. But we'll check out what we have for today. It is July 1st, just after 11 a.m. Eastern. So all of our standard rates are live here. We will set up a basic scenario to compare the APR across the programs. If you'd like a full breakdown, an itemized loan estimate that itemizes all the fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. What we will do today is we will compare a scenario with a 500,000 purchase, 400,000 loan amount. That corresponds to 20% down, 80% loan to value for a single family home. And we'll use an estimated 760 credit score for the demos and an estimated 40% debt to income. So those are the settings we'll have for everything here. Let me go ahead and share my screen. And we'll see the rates for today. So typically the first option for most borrowers and the most common loan type here, a 30-year fixed conventional loan for a primary home. And today rates come in at 6.624, final APR 6.966. It jumped up a little bit from last week as some of the news changed the sentiments here. Now, if for any reason our customer doesn't qualify for a conventional option, the next option we typically want to present is an FHA option. FHA allows more leniency on credit issues, as well as a higher debt to income ratio overall. However, it does require upfront and yearly mortgage insurance. Rates today come in at 5.875, final APR 6.841 with all of those fees included. So notice if our customer qualifies for both, FHA could be a touch cheaper, but does require that mortgage insurance yearly. And if our customer needs to use FHA, definitely very comparable to conventional, so a great option for many borrowers. Now moving on to our VA options. We went over these last week, but a basic scenario here for a 30-year fixed VA for our eligible veterans and active service members. Rates as low as 6%, final APR 6.299. And the final agency government option here, 30-year fixed USDA option. USDA loans only work for properties in USDA eligible areas. Those are typically the rural areas of the country. So if our customer and our property is eligible, this is a great option. Rates as low as 5.99. Final APR comes in at 6.735. Notice our customer will probably be comparing that to an FHA, which it's a little bit cheaper, as well as a conventional is a little bit cheaper. So great option for properties and borrowers that are eligible. Now, those round out our standard agency government options that every other bank and lender has. But if our customer doesn't qualify, many other banks or lenders will have to deny them. That's where we love to start with our 5,000 other options. Starting here with our 30-year fixed non-QM alt doc primary home. So if our customer for some reason doesn't qualify for conventional or FHA, needs to use alternative documents, we have many options. We have alt doc options to use bank statements, 1099s, P&L statements, assets, all kinds of different options. We went over quite a few of those last week as well. Rates come in at 6.999, most likely for a bank statement or similar. And the final APR comes in at 7.318. So notice we're well within half a point here of conventional, since conventional jumped up quite a bit there the other day, whereas the non-QM pretty much stayed the same. So a great option here, very comparable to our conventional options to use alt docs. And now for our investment properties, lots of flexibility, especially with non-QM on investment properties. So first up here, non-QM alt doc for an investment property. This would probably be a bank statement or similar. Rates as low as 7.375%. Final APR 7.705. And let's compare that with our other investment property options. So first up here, our standard conventional option. Remember, there are no government options, so no VA, USDA, or FHA, but we do have our conventional option for an investment. Rates come in today at 7.25. Final APR 7.611. So it's a touch cheaper than our alt doc option, but we always recommend our investors to check out our favorite program, the DSCR, and the topic for today. So we have a few basic options. Jose will obviously show us some more in depth. So DSCR stands for debt service coverage ratio, no employment, no income needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. For all the demos here, we used a ratio of 1.5. However, any property that cash flows monthly has a ratio over 1, which is preferred. This first option here has a 3-year prepayment penalty, which is standard for these programs. So this is a more common option. Rates come in today at 7%. Final APR 7.342. Notice it beats conventional and alt doc options, which is absolutely amazing. And our 30-year fixed DSCR with a 5-year prepay. Some programs do have a 5-year prepay and can even lower the rates even more. Rates as low as 6.75. Final APR comes in at 7.072, which beats conventional substantially. And our final option here for DSCR, some states and some investors don't like a prepayment penalty. No problem. We do have those options. Rates as low as 7.5. Final APR comes in at 8.008. So notice that's a touch higher than conventional, but many investors prefer DSCR to conventional. No income, no employment, lots of flexibility. We do recommend our investors add a prepayment penalty to sweeten the deal. As you can see, the rates get much better. And moving on to our final two options we go over every day. These are very cool new options. 30-year fixed second mortgages allow our primary homeowners that have a low rate first mortgage to still get cash out with a fixed second mortgage. This is not a HELOC, not variable. HELOCs are variable and obviously start typically a little bit higher rates. So our 30-year fixed second mortgage, a great option to get cash out. Rates as low as 8.75. Final APR 9.189. And these are non-QM options, so they do have bank statement and similar options. Great options for our borrowers. And for investment property, same program here, non-QM, 30-year fixed second mortgage, get cash out of an investment property without touching that first mortgage. If you have a low rate, still get some cash out. Rates as low as 9.875. Final APR 10.185. Definitely a better option than HELOC for most investors, as not many HELOCs work for investment properties. So lots of flexibility there. Let me go ahead and change my screen again. We'll get into today's topic, which, as I mentioned in our live demo, we never get to go into the details of what is available for some of these programs. DSCR is our most flexible program. Thousands of options just under DSCR alone for variations. I'm sure Jose has some tricks up his sleeve. And we even have other episodes with other tricks we can do if he doesn't touch on them. So literally thousands of programs and options and adjustments we can make to DSCR, which make it our favorite program for our investors. So Jose, what do you have for us today?
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. DSCR stands for Debt Service Coverage Ratio. This is an investor-only loan where the borrower is qualified based on the gross rent produced by the property. Gross rent, you divide the housing expense into the gross rent, and that's where you get your debt service coverage ratio. Preferred options are at 1.0 or above DSCR, but you do get pricing adjustments. The higher the DSCR goes, you're going to get a lower cost. The highest tier is 1.5 or above, then you got 1.25, and then 1, and then below 1, 0.75 to 0.99, and below 0.75. So let me go ahead and share my options with you today. I am starting today with the 15% down option, which used to be the unicorn for the investors, the DSCR investors, but now we're getting more options of the 15% down DSCR option. So I can see the rates definitely dropping on this 85% LTV option, with 8.499 is our lowest cost option at par, and you can buy that down to 7.124 at a cost of 3 points. And please note, as always, never any mortgage insurance applicable on non-QM. So this 85% LTV loan option does not have any applicable MI. Our second option here is our more standard 20% down DSCR option. Lowest cost option is 7.375, which is at par. And you can buy that down all the way to 6.25. That's a beautiful rate and not a typo. In our 25% down option, 7.125 is our lowest cost option at par. And you can buy that down to 6.375 at a cost of 2.5 points. And now for some of the extra tweaks here. Our low ratio, 0.75 to 0.99 DSCR. This is for those properties where the monthly gross rental income does not fully cover the total housing expense, but we can still finance it with only 25% down. Our lowest cost option is 7.99 at par, and we can buy that down to 6.75% for our low ratio 0.75 to 0.99 DSCR option. And then our no ratio less than 0.75 debt service coverage ratio with only 25% down payment. Lowest cost option is 8.624 at par. And you can buy that down to 7.124 for our no ratio less than 0.75 DSCR. Amazing that we can finance that property with only 25% down. That is not cash flowing even 75%. And now another interesting twist here. Our short-term rental DSCR purchase, we are able to use the DSCR options for our short-term rental properties using both AirDNA for the purchase or short-term rental revenue reports for the purchase as well if the seller will provide them. And 7.25 is our lowest cost option at par. And we can buy that down all the way to 6.375%, 80% LTV for our DSCR option that allows using AirDNA to qualify the borrower. And now for our low credit score borrowers, our minimum credit score is 575 at a 65% LTV for both purchase and actually for the refi, cash out refi, it's also the same LTV. This is a brokered product, borrower paid pricing here. So you're looking at 11.375, no discount points, but there is a 2.75 point borrower paid fee. And our standard cash out here, our last two options are going to be DSCR cash outs. This is our DSCR cash out at a 75% LTV. Our standard LTV here for a cash out, 7.25 is at par. And we can buy that down all the way to 6.375. And our last option is an 80% LTV. Yes, you hear correctly, 80% LTV DSCR cash out. Now this option does require at least a 720 credit score. Now this is a brokered product as well. 11.625 is at par with a 2.75 point borrower paid fee for our last option here, our DSCR cash out to an 80% LTV. So we presented multiple options for you here for our high credit score borrowers, our high LTV borrowers, our low credit score borrowers, our short-term rental borrowers. So definitely look to the mortgage calculator for all of your DSCR loan needs.
All right. I don't see any questions here. No questions. But again, our favorite loan program here, and definitely something that every investor should be aware of, and every loan officer should be working with their investor clients on. So we appreciate everybody tuning in. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different loan type. So we'll be back tomorrow with a new loan topic. Appreciate everybody tuning in. We'll see you tomorrow.